Good afternoon and welcome to the Tonya Esquibel Real Estate Show. Here every Saturday from noon to 1, helping families in Middle Tennessee since 1997. My co-host in studio with me every Saturday, Kim Hollingshead, Hollingshead & Associate, real estate attorney. And I'm so excited about our show today because we get together and we get so excited that we have to actually meet 2 hours before we actually record our show because we just have so many amazing thoughts, ideas, and how to educate people around real estate. And so, Kim, I know that you have a book that you brought with you today.
I
did.
did.
We're going to be talking about that. Also, I want us just to talk about, in our format that we've kind of changed a little bit, just being more relaxed, is like what are consumers feeling right now as we're going into fourth quarter and going into first quarter of next year? We have a war in Israel. Like there's a lot of dynamics that I am feeling from consumers that we've been talking to this entire week. So I don't want it to be a negative show, but I also want it to be a reality of what people are feeling and what they're facing. And then also, where's the opportunity? Because a lot of times when we look at, challenging times, that is where opportunity always arises. And it's just like having faith, it's staying true, it's getting with local people that can guide you the right way. And home ownership is still, like we looked at, like there was such a great post that our marketing person did, dealing with Upload Media. He was like, okay, in 5 years, you just paid $150,000 in rent, but you don't own anything. And rental prices are continuing to go up. And so I want everyone to know that our show is always based around how to provide wealth through home ownership and to provide those facts, help educate you. And I feel that consumers in this market are just so challenged because they have been so consumed with the fact that rates were 3.25%. And now we're seeing rates in the upper sevens. But historically, over the last 20 years, the average rate's been 7.75%, which we continue to talk about. So it does not mean it's the time to walk away from home ownership. It's just make sure that you're with someone that can guide you, can help you, and continue to appreciate. Because what we're seeing on our side is home prices aren't going down. Yes, there's more negotiations. You can get more incentives. But the forecast is for home prices to continue to increase, which is different than where we were in 2008. And I think a lot of people think, 2008, I'm just going to sit and wait. But rates were not that high in 2008. Inventory was in an abundance. Now we're short on inventory. Rates are higher.
It's just a different environment. We have inflation like never before.
Yeah.
And so that inflation is playing a huge part in the rise of home prices. And so I completely agree with you. I think there's a lot of fear and uncertainty. Some of it is real and some of it is created, right? But, I think that there is a general sense in the buying community right now, people who are already living in a home, they have a great interest rate. They're like, well, I don't have to move, so why would I move? They're missing out on the bigger picture and the long-term benefits of purchasing in a buyer's market because we do talk about inflation. We do know that when interest rates fall, there's going to be a huge number of people coming off the fence, and that is going to create a buying frenzy like what we saw in 2020, 2021 when the rates fell so low. I mean, rates do contribute so much to a buyer's willingness and eagerness to purchase a home. And right now that eagerness just isn't there. But when rates dip to a certain point, where do you think that number lies? If you had to say a range?
I think that in looking at where we were, I mean, obviously clients were spoiled in the 3s. I think if we just get into the upper 5s, low 6s, that
agree.
Creates activity.
Huge activity. I think if we see a 5 in front of an interest rate or getting close to it, like you said, the low 6s, even just getting close to a 5 is going to start pushing people off the fence or ready to buy. People need to buy a house now. They just aren't doing it because they're waiting for rates to fall. They know that they're going to at some point. I mean, rates have been going up for 24 months, 2 years now. So everyone's been waiting and waiting and waiting. Now they're just going to feel like they're going to wait a few more months. Now, yes, rates are going to be lower. But what is going to happen is the home prices are going to be higher. You're going to have more multiple offer situations. We're going to be covering appraisal gaps again. Fewer repairs are going to be made. Those incentives are all going to go away. So it's like, so buying in a buyer's market when rates are high means that your out of pocket is lower because your mortgage rate is higher. But I would rather come in on a higher rate, especially if I'm upgrading, right? Like if you're upgrading your home, if you're going from like a, say $500,000 home to a $750,000 home, wouldn't you want to buy that when you have less cash coming out and also just the terms and conditions of that transaction are going to be better for you overall. Why? Because the rate is higher. But that if we're all waiting for rates to fall, then we're all going to be fighting for that same inventory when they do. Or you can just beat that by a few months. And I think you and I both talked about this before. We're 6 months out from really seeing the rates be at that level. If you apply for a loan now, you spend your time shopping. We're going into the winter months, which, seasonally, the prices tend to be a little better. The incentives tend to be a little better seasonally comparatively. So, yeah, I mean, I would, if I was going to take a look at that, I would definitely take a look at that now. And I mean, at least run the numbers with a loan officer. Yeah. Right?
So it's interesting because I always love sharing stories about our clients. And this one actually is personally home to me. My brother is looking at relocating from Texas.
Nice.
They looked at an older home, which is really priced aggressively. It's in Mount Juliet area. So I just want consumers to kind of think about this right now. So you're thinking this price is $390,000. It is a two-car garage, has a big yard. It's an old home is an old home. No matter how much you remodel it, an old home is an old home, right? No incentives. That rate is going to be 7 7/8. That payment is going to be based upon 7 7/8, even though you got a $390 sales price. To where we go look at new construction, and it's interesting because my sister-in-law is flying in on Friday because I'm like, you need to go look at Smyrna. We've got new construction to where they are offering 4.99% interest rates. So if you take a 4.99 compared to a 7 7/8, that 7 7/8 home might be $390,000. The 4.99 home, brand new construction, not old home, that payment when I ran it for them was $200 less, even though the sales price was $450,000.
Oh my gracious.
So new construction is the way to go. If you can find a builder that is in your area and has inventory and that is moving it, they are doing rate buy downs. And so my sister-in-law, this is what a consumer thinks. Oh, I see $390 versus $450. I'm going to go $390. But without the incentives, that $450 was much better, brand new, warranty for a year.
That's a good point.
Lower payment.
Yeah.
But that is what consumers aren't seeing. They're just looking at the sales price.
Yeah.
And that's where I'm like, consumers, right now, today, if you want to buy a home, new construction is the way to go with the right builder that's offering incentives. Not only are you getting lower interest rates, getting buy downs, but you've got no maintenance going in. So she was going into this $390 home and remodeling it.
Oh.
Okay, so what does remodel look like? Stay tuned. We'll talk about that when we come back. You're listening to the Tonya Esquibel Real Estate Show right here on Super Talk 99.7 WTN. Thank you so much for tuning in the Tonya Esquibel Real Estate Show. We're here every Saturday from noon to 1. And my co-host, Kim Hollingshead, real estate attorney, is with us every Saturday, helping educate us on consumers from like an entire real estate spectrum. She's a real estate attorney. I've done mortgage loans for almost 30 years. We work with different real estate agents, different builders. And so if you're just now tuning in, you can always catch our show on our podcast, Spotify, also social media channels. But Kim, the most interesting thing that, like, I get frustrated. And it's so bad that I get frustrated because it's my own family. Like, this is my example that I'm sharing because I feel comfortable to share it with them.
Well, we can talk about our family.
Yes, we can. And so they're moving here from Texas. And so they were looking at, if you're just tuning in, we were talking about the difference in interest rate and sales prices right now. Where is a good opportunity to buy? And in my opinion, it is new construction. Giving you a perfect example right now, they found an older home. The garage was converted. They were going to come in. It was $390,000 to where new construction would be $450,000, $475,000. So this is a resale as is. It is in MLS. This is as is. They're not going to make any concessions, right? So they're going to come in. You buy your home for $390,000. Let's just take that for an example. We buy our home for $390,000, and we got to put $100,000 in to renovate it. What is prime right now?
I think it's like
8.5%. And most banks, every bank I've talked to is prime plus one. So you're paying 9.5% to renovate an old home. That's always going to be an old home. However, I'm trying to, this is my family, share with them the best opportunity in this market, in this environment. If you're relocating from Texas and you really want to live in Tennessee, does not have to be your end. This is my home for 30 years. It's a 3 to 5 year transition. So why not look at new construction? Because we go to new construction, you've got a brand new home, $475,000, not $390,000. But you got to realize $390,000 would have been $490,000 because you had to fix it up and 9.5% interest rates. So now you have a new construction home, and builders are offering 4.99, 6.25, depending on the builder that you want, to where rates right now are in the 8s. So new construction is the way to go.
There are so many great deals.
And it's inventory that they're pushing.
Yeah.
So it's move-in ready. It is a lower interest rate than what you can get, the buy-down incentives. So for them, they thought, oh my gosh, this home is $390,000. I can't afford $450,000. I can't afford $475,000. I can't afford $500,000. But when you put the interest rate to it and what builders are doing on the new construction side, it is less than what you would pay for a $390,000 sales price. And that is what I think consumers are not considering.
Wow. So they really should just come, give you a call, let you run some numbers. You know, even if they have a realtor, they can still call you. Even if they're working with a loan officer, they're allowed to shop around. I mean, they can give you a call, let you run some price comparisons. And here's the thing is that you work with so many builders, and so you're so well connected in that community. You know, of course, being the president of the Metro Nashville chapter of the Home Builders Association. So you're just plugged in to that builder network. And we can definitely direct them to a builder. Someone's going to have a product that they really love, probably.
Yes. So I like to do some fun transparency stuff. So I sent this, and this is my family. So you got to think a consumer that does not even know me. I mean, this is my brother and sister-in-law, and they're still challenging me, right? So it's like a consumer, that's why I want to share the story. I go, I'm not going to say the name of the builder, but this builder versus this area versus an old home as is. Old home that needs remodeling. Loan amount, $312,000. That was 7.5% to where right now we're 7 7/8 because rates have risen since last week. That was $21.85. Add money to remodel and appreciation will be less than the new construction, and maintenance costs more with less appreciation. So what I mean by that is, what I was telling them is if you get into a new construction community and you get on the first phases, when they open up the next phase, you automatically have built-in equity. If you buy this old home, resale home, there's no future phase.
Sure, because you're coming in like on a startup.
You're just waiting on the market.
Yeah.
And so trying to explain that to them. a brand new home with a warranty that is move-in ready. You don't have to live through a remodel. So one of their questions was, can we live in the home and remodel it? Have you lived in a home with remodelers? I have a hard time converting from my Airbnb every week to my upstairs studio versus my Airbnb. And that's not dry dust. That's not like hammering, like contractors not showing up. Like that's just not.
It's very stressful.
It's very stressful.
Yeah, I'm going through it.
Yeah. So on the new home that we looked at, which is a builder, a very reputable builder, it is a national builder. It's not local. I've tried to get them to look at some local builders as well. But their sales price was $100,000 more. Financing the same, 20% down on both. Their principal and interest at that home would be $1,856 versus the whole old home would have been $2,185, and you still got to remodel it.
Oh my goodness.
And you got to live through the remodel.
Yeah.
So I think consumers are just looking at sales prices and wanting to buy the cheapest sales price, but you got to look at the financing because the financing is a game changer in this because this home is $150,000 more, but the principal and interest is less because the financing package and it's brand new. Wow. And that is where consumers are not hearing that education.
Yeah, so we're sitting here talking about, well, everyone's going to come off the fence when rates get into the fives, and you've got builders right now offering a 4.99.
Yes. And even it's 4.99 to 6.25.
It's worth to just go take a look at it.
And it depends on your price point. It depends on how much you're putting down.
Yeah.
Like I talked to a builder this week, and they reached out to me and was like, what is a good financing package? We have $60,000. $60,000 to apply toward a rate buy down.
Wow.
Now, I have my son's pastor that is negotiating a contract right now. And my son's a realtor, and we're in the mortgage business, obviously. And he tried to make an offer for $25,000 to a resale seller, not new construction. They counter back $5,000, so there's no way we're going to give $25,000.
Oh, sure, because sellers they want to pocket every bit.
You're just not going to get the deal that you would with new construction.
Yeah.
And I've always loved new construction, and I'm not saying anything negative against resale because I mean I'm going to be listing some properties that we have in our portfolio as a seller, but as a seller, because I know the business, I'm going to be like, okay, we'll throw out $25,000 to help you with closing costs to buy down your rate, because it's rising so much. And that's where it goes back to, in my opinion, is who is your real estate agent?
Yes.
How are they consulting you? Because builders get it. They've done it for years. They know when the market shifts, you got to throw in some closing costs.
Well, and it's also like, hey, realtors, did you know that there are 4.99% interest rates? Are you using that information to market to
but you know what they're
potential
doing?
buyers?
They're lowering sales price, which does not help anything.
Yeah.
Because it would have been better to give $25,000 instead of lowering a sales price, because that consumer could afford that payment to buy down the rate. So one of the things that I shared with him, I said a construction remodel loan is tied to prime, and prime is 8.5%, which everyone is at prime plus 9.5%. It's your choice. Just letting you know the numbers, and that sales price might look great, but how much do you have to put into remodeling with prime, then converting that to a permanent loan, which is another set of closing costs.
Another set of costs.
Was not the right school district that you wanted. As far as they wanted a certain school, it was still not that school. You can always remodel an old home, but it's still an old home. And there was no garage. And that's definitely a negative in our market if you don't have a garage and you're spending almost $500,000 for a home. That's just not good. And basically, sounds like they need a trip to Nashville. So they're flying in on Friday night.
Oh, and they want to go look at some new construction.
Some new construction, yes.
Well, that's what I was trying to talk to a young friend of mine who's just recently engaged, and he texted me and said, hey, I got engaged. I mean, he's young, maybe 27, 26 years old, and I was like, oh, that's amazing. I was like, are you going to buy a house now? And, because that's always our friend. Not, when are y'all going to have a baby? It's always, y'all going to buy a house? Because we're in real estate. And he said, I know I need to, but Kim, I'm in a lease still. And, rates are so high, I'm not sure I can afford to do it. And I directed him and pointed him to new construction. I said, look, it doesn't hurt anything. Go walk around some new models. Just go take a look. Because oftentimes it's just, like you said, running the numbers, and then they realize, oh, wow, these new construction homes are so nice. And young people want new. They like nice.
Less maintenance, open floor plan, like not popcorn ceilings.
Exactly.
Yes. The downside that for my brother and sister-in-law with his family, so my niece is 9, my nephew is 15. Their downside is they have animals. They want a bigger yard. And
Okay,
so
I
with new
understand
construction,
that.
sometimes you don't get the yard aspect,
Yeah.
but you still get a yard.
Yeah.
And if you're looking at $200 less a month in a payment without going through a remodel, I think I just want consumers and listeners to know that, yes, you can look at a sales price, but the financing package is what is going to
determine that payment.
That is correct.
It's your mortgage determines
Yes.
the payment, not the
Yes.
purchase price.
That is in this environment more so than ever.
Yeah.
And you are getting deals that you've never been able to get before in this market, especially when it comes to new construction. And I say this, and I'm hoping realtors are out there listening and are thinking about how to incorporate that with their sellers instead
Right.
of just dropping a sales price. And I
Right.
have a realtor right now, very close to my hand,
And they're just
and-
dropping sales
sales
prices.
price. And I'm like, why are you not tying like rate buy downs and incentives? Because that will stand the property apart.
Right.
And so it's just the mindset to get there. But I hope those numbers help someone understand that my brother was going to buy this home for $390 versus a $450, and the payment was $200 less a month for the brand new
Wow.
construction.
This conversation illustrates why, consumers are always looking for a loan officer and real estate agent that they can trust. It's the number one quality that they're seeking. And we really understand why, because it is so complicated.
Yeah.
And you really do have to have an expert holding your hand throughout that entire process, knowing that they can work with someone who's as plugged in to the entire real estate community, new construction, everything as plugged in as you, and then working with the right real estate agent. I mean, that's like a perfect team. It's like a dynamic duo. They're going to be taken care of.
Absolutely. So love to share like real stories that we're
love
dealing
that.
with on every single day. If you're out there and you're listening and you're thinking, wow, I did not know that. I've been looking at this price point, but maybe I could afford new construction at this price point because of the financing package. Give us a call, 615-300-0794, 615-300-0794. We're going to take a break. Stay tuned. We're going to continue to talk about the value of home ownership on the Tonya Esquibel Real Estate Show right here on Super Talk 99.7 WTN. All right, welcome back to the Tonya Esquibel Real Estate Show here every Saturday from noon to 1. And in studio with me is my co-host, Kim Hollingshead, Hollingshead Associate, really is, I'm laughing because I want to say something that we said off the air, but real estate attorney. And we've been talking about interest rates, and we've been talking about, I shared a personal story just with my family. My brother is wanting to relocate from Texas, which I'm so happy to have them closer to us. My daughter just moved back from LA in April. And, but I mean, I just want to be transparent. And that was what Kim said and made me laugh before we came back on. And she just said, rates suck. And they truly do.
Yes, they do.
They're
terrible.
It's just putting it out there. We all know it.
Yep.
So why is it a good time to buy? Because we all say rates suck, but there is opportunity when it comes to owning a home, regardless, because we are misled from the fact that rates were 3 and 3.25% 2 years ago, and now we're at 7 and 7/8, 8.25. It doesn't mean that rates truly suck. It's just a different market.
Absolutely.
And-
Look, I'll give you some reasons not to buy right now.
Okay.
How about that?
Let's go there.
Let's give some reasons not to buy a home. Well, number one, you can't throw around and let everybody know how much cash you have on hand, because you're not going to have to compete for offers and come out of pocket for appraisal gaps and things like that. I mean, you know, if you could get a higher interest rate or come out of pocket, of course you want to come out of pocket the cash, right? Because you want everyone to know how you're flossing. Or how about reason number two is, you know, you want life to be an adventure and it should be interesting. And oh my goodness, the certainty of getting an inspection and having the time to negotiate repairs with the seller, that's just boring. Don't you want to be in a multiple offer situation where you're thrown in, you know, with other buyers and everyone's fighting over the same house and you have to hurry up and rush to the closing table? I mean, that sounds like more fun than actually having the time to do an inspection. That's another reason not to buy right now. So, you know, I mean, there are absolutely reasons. That's kind of what we're setting up here. And I'm being sarcastic and I'm putting it out there like in a little bit of a funny way. But the truth is that that's what makes it a buyer's market, is that the rates are terrible. The rates suck right now. And it's terrible because it inserts a lot of fear and uncertainty into people. And that's the part where I have a lot of compassion, because guess what? I work in real estate. I feel the fear and the apprehension more than probably just a regular person who's not in the real estate mortgage industry, right? We feel it more than anybody. And I have a great business coach, and he's amazing. And he coaches people in Fortune 500 companies all over the world, and they're at, you know, at C-suite level. And I asked him, is it just us? Is it just us who are in real estate and lending? Are we the only ones feeling the pressure? And he said, no, everyone's feeling the pressure. Yeah. You know, he feels like we're in a silent recession right now. And that the consumer confidence is lowered. It just considerably over the last couple of months. And yes, the war in Israel plays into it. There are a lot of other things that are playing into the reason I think people's savings accounts are depleting, that their interest rates on their HELOCs obviously have gone haywire. Car notes
from 3.5 to now 9.5.
Yeah, I mean, to buy a car,
depending on prime.
How hard is it to buy a car right now? I mean, just inflation, just prices at the grocery store. We are all feeling the pressure. And so if someone presents to you, well, now is a great time to buy a house. I mean, it sounds ludicrous, and it sounds just like a sales pitch, doesn't it?
It does. It does.
But you buy when no one else is buying, and that's the Warren Buffett plan, right?
It is.
We don't buy when the market's high. We buy when the market's low. Right. We buy when it's slow. And what makes it slow is that the rates suck.
Yeah.
Right? But it's like you said, but new construction, oh my gosh, what an opportunity to buy a brand new home. Yeah. That's a perfect example of there are deals to be had out there, and now can be a perfect time for you to buy, but you've got to explore your options.
Yes. So to recap on that, I do agree that rates are just not in a good place. But a year ago, you were not getting $25,000, $50,000. Like I said at the beginning of the show, I had a builder that I had a conversation with this week, and they're giving $60,000
cash
to buy down the rate, or however they want to spend it. Closing costs. That was not predominant 2 years ago. That was just off the table.
We never saw closing cost credit on any purchases.
New construction wasn't even paying for title insurance anymore, which they always have traditionally. But in that market, sellers were not even paying title insurance. They were just not covering any costs whatsoever, and they wanted multiple bids. So I always look at when the market feels so tight and so constrained, that is where there's opportunity if you're being wise about where to find the opportunity. And so I am all about any real estate agent selling a resale home. Yes, sellers need to sell their home. They need to move on. That's great. But I do feel like you need to get educated and teach your seller how to put a financing package together the way that new construction builders do. Because right now, with my own personal family coming into town, I'm like, new construction is the way to go. You're going to get a lower interest rate. You're going to get you don't need a home inspection. You've got a 1-year warranty. So if resale sellers are wanting to compete and realtors are wanting to compete with new construction right now, you've got to get aggressive. And you've got to put a really good financing package and plan to compete with new construction. What are the challenges with new construction? You run out of inventory, there's nothing left. So that resale seller has a home that's ready to move in. So there's opportunity. It's just getting the right realtor. And so if you want to know who are the best realtors that we work with in Middle Tennessee, please give us a call, because you need that on your side as a resale seller right now. 615-300-0794, 615-300-0794. New construction is the move right now in Middle Tennessee. There's inventory. But I do think there's something to be said about a character of a neighborhood too. Like my family that's moving here, they want a bigger yard. They want mature trees. They want certain things. And it's just figuring out the financing package. And that is what I see is where consumers are missing their opportunity, is because they're not exploring the financing options that's available and being able to accomplish that. But there's opportunity there, 100%. And this resale home that I was talking about with my brother, that home is in the MLS as is, $390,000. A year or 2 years ago, it probably would have been listed at $390,000, but it probably would have been $450,000 because
by the time it sold.
Because of all the multiple bids.
Right. And it would have appraised at $400,000, which means that the buyer's coming at it
$50,000 more.
Yeah. And that's where I was joking around about, you want to show everyone flash your cash by bringing all this cash to the table to cover all these appraisal gaps. I mean, that's the thing, is that I think, yes, you got into the home at a great rate. How many people purchase at that low rate and came out of pocket all that cash, and they wish they had that cash in their pocket now? Cash is king.
Cash is king. And that's the difference too, because even if you look at, depending on the loan amount, I'm just going to give an example, but if you take a payment on a home, let's just say $400,000 roughly, and I'm not running the numbers, but just
of course.
Estimating. At that mid 3 and 7/8 range versus 7 and 7/8, you're probably looking at $400 difference a month. $4,800 a year, but you just paid $50,000 more for that home because you wanted the home and rates were low. So that is where I think people are missing the opportunity, because you're not paying $50,000 more for that home, and you're getting concessions you've never did. Even though rates are higher, you're still entering a better equity position.
Right.
Because what about that client that does have that, married that rate, 3 and 7/8, 3 1/4, whatever it is, and paid $50,000 more for his home? It's going to take him 8 years to recoup that $50,000 if homes don't keep appreciation. If they do keep appreciating, which we do think they will, but you're still 3 to 4 years.
And to upsize, to go into a bigger home at a 4.99% with new construction, that's a great deal. Even if you're in a low 3 point something percent interest rate, being able to get into that bigger home, you're not paying a huge difference in the interest, certainly not in the sevens. It's a 4.99.
And your interest is tax deductible. So
yes,
hopefully
it is.
You get a better tax deduction for that. One thing that I feel that I am seeing, in this market, I mean, obviously the mortgage industry is down. I mean, I got in 1995. I've never seen rates do this. So I'm in an environment I've never experienced before. So I understand the pain. I understand what everyone is seeing. I understand ooh, wait, what's going on?
Right, right.
Should we sit still? Is there opportunity? And that's why I say sometimes when everyone's sitting still is where there is opportunity. It's just being wise and coaching with the right people and learning. But one of the things that I want to talk about when we come back is my heart for my consumers that have so much equity, and there's so many phone calls coming in right now, and how do we help them? So we got to take a break. When we come back, we'll continue on. All right, welcome back to the Tonya Esquibel Real Estate Show. So we were just talking about interest rates being high, but 2 years ago, you're paying $50,000 more. It's maybe $400 difference between 3 and 7/8 and 7 and 7/8, depending on your loan amount. Obviously, of course, that's a rough number that we're using. So that's $4,800 a year, but you just paid $50,000 more for your home. What's your recoupment period? So a lot of people feel like, oh, I am just not going to buy right now because rates are so high, they're going to come back down. The reality is a rate's really going to come back down. Are they ever going to hit the threes again, the twos? Right. It was the first time ever in the history of the United States. So if you're banking on that, you're still going to miss out on owning a home and home ownership, which will always continue to build wealth. One of the things I wanted to, real quickly, I want to just touch on this briefly because you brought a book and I want to share your time about the book that you brought into the studio today. But real quickly, I think the biggest thing that I'm challenged with as a loan officer right now, a financial advisor, whatever, educator, is I have clients calling me that have so much equity in their homes and they're so married to their 3.5% rate, but they want to tap into their equity to where a home equity line of credit is prime plus 1 right now, which is 9.5%. And so they feel like they're handcuffed into their equity situation because they're, psychologically are tied to this 3.5, 3 7/8, maybe it's 4.25, whatever it is. And then they don't want to go to 9.5%, but they're paying 28% in credit card debt. Like, consolidate, let go of the 3.25, 3 7/8 if you are in a situation that is going to cause you to be bankrupt. Like, I have a client right now that called me and was like, had really bad COVID, probably $200,000 equity in his home, but because he had really bad COVID, he wasn't able to work. So he got behind on his house payment. And the servicer basically said, we will give you a forbearance, but we won't report you late. Well, now that servicer sold to another servicer and he got a foreclosure letter.
Oh, no.
So I'm like, don't hold on to that 3.25 or 3 7/8. Like, if you are in a situation, because inflation is a 40-year high, and you have 28% credit card debt, it's still better to move it from that 3.5 to 3 7/8 to maybe 7 7/8, and to get rid of that and have a peace of mind and to get your equity to have a breath of fresh air. And so that is what I'm seeing right now. Like, I've gotten more phone calls in the last 4 months of clients trying to tap into their equity. And then when I tell them prime plus 1 is 9.5%, they're like, oh, I can't do that. And they're continuing to suffer because they're married to this low rate on the front end.
They're so afraid to let it go.
They're so afraid to let it go. And I get that and I understand it, but to what extent? When you've got to take it as a whole. Here. Yes, you have to look at your whole financial DNA and see what is best in this season for you and your family. Yeah. And not just be hung up on that rate. So that is something that I have been challenged with as an advisor because I see it and I see what they're paying and I see how they're being, handcuffed into this bondage of credit card debt and different things, because our credit card debt is probably higher than it has been in the last 2 years because of inflation. I'm using credit cards more than I have before.
Everybody is.
I used to tout, I don't have credit card debt, but we're all using it.
Yes.
Because of the consequences of inflation. So if you're in that situation, don't get so caught up in, I can't get rid of my 3 and 4% and go to a 7% or an 8%. Well, you're probably paying 28% on your credit card.
Yes.
And your auto loan might not be at 0% anymore if you bought it recently, because it's probably going to be 8 or 10% too.
Right.
So just sit down and talk to a financial advisor. We're your local team. We'd be happy to help you. You can always call us, 615-300-0794.
Yeah.
But that is what is really hard for me, because I know how to get them over the hump. And this particular client did not do it. And so now they have a late on their credit, and now they're stuck. Even though you have $200,000 in equity, if you have lates on your credit and your credit score plummeted, I can't get your equity out now.
So now he's got to sell to get the equity out of that house. He has to sell the home to receive proceeds.
Or come up with his arrears that he needs to pay. And he's like, I don't have that laying around.
Right. And that's the reality for most people.
It is. And they're going to wait until they're in their arrears.
Yeah.
And then they're going to call.
Mm-hmm. And then it's like, too late.
Yes.
Take care of yourself. You know, it's like you don't have anyone to impress. We're not out here worried about your neighbor's not looking up your interest rate. Nobody knows what you're doing with your mortgage. No one's looking at the tax records or pulling up the register of deeds and looking at, I just realized they just recently refinanced. It's no one's business. No one's looking at it. Take care of yourself. If you find that you're in a situation where you're running low on cash, well, you should have 12 months reserve in the bank to help get you through really difficult situations is what most financial advisors are going to advise. Most families don't do that. They don't have the ability to do that. And it's like you said, you know, pull that equity out. That's the entire reason why homeownership is so important. When we talk about security and financial security and having a safety net, this is the safety net that we're talking about, that when times get tough, but you have to take action. You have to take it quickly.
Sooner than later.
Yes, take action, take it quickly. Successful people always take action first. They act very fast. They don't wait. They don't hem-haw. They don't sit in uncertainty for a very long time. They make a decision to take action and they go and do something about it. If you are in a situation where you know, you find that your savings is depleted, you're racking up credit cards, and you are like this gentleman, you have equity sitting in your home, even if rates are at 7.75 right now, or even if you do have to pay out of pocket some discount points to get that rate low, at least refinance, pull the equity out. You can use the equity in your home to help buy your rate down. It doesn't even have to come out of your pocket. It's worked into the loan, just like all the closing costs are worked into the loan. You go and refinance, you get a check a few days later, you get a check or wire transfer to your account for, you know, however X number of dollars that you need that are going to help get you through whatever uncertain times. Or you don't even have, you know, you can just use that cash to pay down credit cards, to pay down your car, and to get yourself off that hamster wheel, to give you that peace of mind that your paycheck is enough to get you through. And that's what the whole equity of your home, it's not, you know, it's not always ideal to be in a situation where you have to do that. That's not the dream for everybody. We want to have enough in our other investments and, you know, money market accounts and T-bills. I mean, that's what this book is all about. That's why I wanted to share it.
You got to share your book. Okay. Let's go.
Rob Luna.
Close your wealth gap.
He is one of the contributors on Fox Business. I just went to a seminar of his this past weekend. It was with him and Sean Ryan of the Sean Ryan Show on YouTube, and a famous podcaster. They were all about how to bulletproof your life. And Rob taught the audience a lot of financial tips, tax tips as entrepreneurs, and just regular people. He has amazing chapters in here that are broken down by age range. So if you're between the ages of 30 and 40, what does he think you need to do? 40 and 50, here's your game plan.
All right, let me scan.
And he sets it all up for everybody. He has an academy. It's an online program that you can join where he does these weekly coaching calls, and it's called the Wealth Academy, where our listeners, if they're interested in increasing their financial literacy, they want real world tips. They want someone to help actually guide them, because building your nest egg, I mean, you know, you've got so many different products. You got stocks, what to do with your 401k, what to do with T-bills.
So he's talking about financial buckets that I just opened up to you. Building your dashboard was the first step, and now understanding how to navigate and manage your financial buckets is the second core component of your financial literacy lesson.
He makes it so easy for average people to be able to invest their money and know what to do to secure themselves financially. And Rob was a manager of $1 billion fund on Wall Street. He has 4 degrees. He's very educated, and he's a huge believer in real estate. And he himself buys a ton of real estate and invests in real estate.
Wow.
So
that is awesome. That's great. Financial buckets. Real estate is one.
Absolutely.
Stocks is one.
Yep.
T-bills, maybe gold.
Yep.
You've got to diversify. You've got to educate yourself is basically what I'm hearing. And education to continue, because every season is different when it comes to our economy. And so right now is a great time to educate yourself, figure out that, okay, I've got my stock, I've got my 401k, paying rent is getting me nowhere.
Yep.
Even though rates are high, let's help you get with a really great realtor or a really great builder, and let's get you a low interest rate, and let's put financing around the package to help you be able to create wealth through real estate. Because if you pay rent in 5 years, you have zero. If you own a mortgage in 5 years, you could have, $50,000, $100,000, $150,000 depending on your sales price. So give us a call, 615-300-0794. 615-300-0794. You're listening to the Tonya Esquibel Real Estate Show here every Saturday from noon to 1. With me is my co-host, Kim Hollingshead, real estate attorney, Hollingshead & Associates. And we are always excited to provide education. If there's any topics that you would like for us to talk about or questions that you have, please let us know. We're on Spotify, podcast, YouTube, and our social channels as well, and our website. Or you can fan text us at 615-300-0794. Please have a blessed week. Please keep Israel in your prayers, as we are in a totally different environment than we've ever been in before. And God bless you as we travel through this next week together.